Hi, you're watching Investor Insights, and in this video I'll be talking about PEs without the E. Now the concept of PEs, ratios, I've already explained in past videos. So when you look at a stock investment and you're taking PE ratios into consideration, i.e. the price earnings, what happens if there's no E? What happens if you look at a price earnings ratio but the company has no earnings? Well, if you look at it mathematically, for that ratio to happen, the E can't be 0 because the E is the divisor, and obviously you can't divide something by 0. So therefore, what's your course of action? Well, treat it as a real life business investment decision, and if you were to buy a company, put a lot of money into a business asset and it makes no money, does the investment still feel sound to you? It obviously doesn't. So if there's no earnings and there's no E, therefore there should be no P. I would avoid it like the bubonic plague. Companies that have trailing PEs or forward PEs where the E doesn't exist are not sound investments. You can trade them on the downside, you can short them, but I'm talking about your average investor out there who's looking to try and make a living or make a little bit on the side and try and make sense of companies' earnings, using PEs to make their trading, their entry point decisions and the exit point decisions. If there's no E, there's no P, stay the hell away. Another question you might ask is, what happens if the E is negative? What happens if the company has negative growth? It's losing money. Well, that's an even dumber question to ask than the first one. Because if you're not going to invest in a company that makes money, why on earth are you going to invest in a company that's losing money? That's crazy. And when reality sets in and fundamentals catch up, you're going to get crushed. So next time you come across P ratios where the E's don't really exist, you'll know what to do. And if the earnings are actually losses rather than earnings, you'll know what to do as well.